2024 has been a tough year for investors. With the global economy in recession, markets are tumbling, and many portfolios are in the red. But what if I told you that not all stocks are feeling the heat? In fact, some are thriving, delivering double-digit returns while the rest of the market struggles to stay afloat. Intrigued? You should be, because in this video, we're revealing 3 powerhouse dividend stocks that are not just surviving but thriving in this challenging economic climate. The numbers don't lie. With inflation still at record highs and interest rates squeezing consumers, it's no wonder that S&P 500 has been taking a hit, down over 15% since the last start of the year. Unemployment is creeping up, consumer spending is down, and even traditionally strong sectors like tech and consumer goods are feeling the pinch. In times like these, it's easy to feel overwhelmed and wonder where you can safely park your money. But that's exactly why today's video is so important. Today, I'm going to show you how you can turn this recession into an opportunity. We're diving deep into 3 dividend stocks that are defying odds and delivering yields as high as 8.6%. Yes, you heard that right. Imagine this, a $100,000 investment in one of these substantial dividend income year after year. For example, if you had invested in Altria Group 3 decades ago, your initial investment could have grown to over $1 million today, with dividends alone providing a consistent and increasing income stream. By the end of this video, you'll not only know which stocks to consider, but also why these companies are so well positioned to keep delivering even as the economy contracts. If you're looking to protect your portfolio and secure reliable income during these uncertain times, you won't want to miss this. Innovative Industrial Properties Inc. IIPR. Innovative Industrial Properties Inc. is a self-advised Maryland corporation focused on the acquisition, ownership, and management of specialized industrial properties leased to experienced state-licensed operators for their regulated cannabis facilities. As of July 2024, IIPR stock price was $113.18, reflecting a 3.85% decrease of that percentage. The company reported total revenues of $79.8 million for the second quarter of 2024, marking a 4% increase from the same period in 2032. Net income attributable to common stockholders was $41.7 million, or $1.44 per diluted share, too. Adjusted funds from operations were $65.5 million, equating to $2.29 per share, while normalized funds from operations stood at $58.8 million, or $2.06 per share. IIPR's annual dividend was $7.60 per share, with a quarterly dividend of $1.90 paid on July 15, 2024. The AFFO payout ratio was 83%. The company's dividend yield was 6.71%, with an annualized 3-year dividend growth rate of 19.32%. The dividend payout ratio based on trailing 12 months of earnings was 133.33%, while it was 90.69% based on this year's estimates and 86.66% based on next year's estimates. The company's expense ratio was not explicitly mentioned, but the debt to total gross assets ratio was 11%. IIPR's earnings and revenue are forecasted to grow by 2.1% and 3.2% per annum, respectively, while EPS is expected to grow by 1.8% per annum. The company acquired a 16-acre property in Florida for $13 million and executed a long-term lease with a subsidiary of AYR Wellness Inc., agreeing to provide up to $30.0 million in funding for redevelopment. Additionally, IIPR executed lease amendments to fund improvements totaling $6.1 million at properties in Ohio and Illinois. The company's total liquidity was $210.9 million, with $2.6 billion in total gross assets. The debt service coverage ratio was 17 times more, with no debt maturities until May 2026. IIPR's revolving credit facility was upsized to $50 million, which remains undrawn as of today. The company terminated its prior at-the-market equity offering program and entered into a no program for sales of common stock and 9.00% Series A cumulative redeemable preferred stock up to an aggregate offering price of $500 million. IIPR's stock performance and financial metrics indicate a stable yet modest growth outlook. The company's focus on the regulated cannabis industry and strategic acquisitions and leases position it well for future growth. However, the high dividend payout ratio and modest growth forecast suggest a cautious approach for potential investors. The company's financial health, with low debt and strong liquidity, provides a solid foundation for continued operations and potential expansion. Altria Group, MO. Altria Group Inc. is a leading producer and marketer of tobacco, cigarettes, and related products. As of July 2024, Altria's stock price was $50.03, reflecting a 1.11% increase. The company reported net revenues of $6.209 billion for the second quarter of 2024, a 4.6% decrease compared to the same period in 2023. Revenues net of excessive taxes were $5.277 billion, down 3.0% year over year. The reported diluted EPS was $2.21, an 85.7% increase from the previous year, while the adjusted diluted EPS was $1.31, unchanged from the previous year. For the first half of 2024, net revenues were $11.785 billion, a 3.6% decrease from the first half of 2023. Revenues net of excess taxes for the first half were $9.994 billion, down to 2.0% year over year. The reported diluted EPS for the first half was $3.41, a 56.4% increase, while the adjusted diluted EPS was $2.46, a 1.6% decrease. Altria's annual dividend was $3.92 per share, with a quarterly dividend of 98 cents paid on July 10, 2024. The dividend yield was 7.84%, with an annualized 3-year dividend growth rate of 4.14%. The dividend payout ratio based on trailing 12 months of earnings was 82.1%, while it was 76.71% based on this year's estimates and 74.10% based on next year's estimates. The company's debt to EBITDA ratio was 2.1 times as of March 31st, 2024. Altria's earnings and revenue are forecasted to grow by 2.5% to 4.0% per annum, with adjusted diluted EPS expected to be in the range of $5.07 and $5.15 for the full year of 2024. The company has a strong portfolio of brands including Marlboro, Black & Mild, Copenhagen, Sikol, On, and Enjoy. Altria's equity investments include Anheuser-Busch InBev S.A. N.V. ABI, the world's largest brewer, and Kronos Group Inc., a leading Canadian cannabinoid company. Additionally, Altria has a majority-owned joint venture, Horizon Innovations LLC, for the U.S. marketing and commercialization of heated tobacco stick products. The company's total liquidity was $5.8 billion, with $2.6 billion delivered to shareholders through share repurchases and dividends in the first half of 2024. Altria's traditional tobacco businesses remain resilient despite a challenging operating environment, and the company continued to invest in innovative smoke-free products. Enjoy consumables reported shipment volume increased 14.7% sequentially to 12.5 million units, while Enjoy devices reported shipment volume increased 80.0% sequentially to 1.8 million units. Enjoy's retail share in the U.S. multi-outlet and convenience channel increased 1.3 share points sequentially to 5.5%. Altria's stock performance and financial metrics indicate a stable yet modest growth outlook. The company's focus on transitioning adult smokers to smoke-free products and strategic investments in innovative products position it well for future growth. However, the high dividend payout ratio and modest growth forecast suggest a cautious approach for potential investors. The investors and the company's financial health, with low debt and strong liquidity, provides a solid foundation for continued operations and potential expansion. British American Tobacco. British American Tobacco is a global leader in the production and marketing of tobacco and nicotine products. As of July 2024, BTI's stock price was $34.73, reflecting a 4.04% increase. The company's reported revenues of $12.34 billion for the first half of 2024, a 0.8% decrease excluding the sale of its businesses in Russia and Belarus. Adjusted organic profit was $5.57 billion, a 0.9% decrease. Adjusted earnings per share fell 2.1% to £1.69, better than estimates. BTI's annual dividend was $2.93 per share, with a quarterly dividend of $0.7431 paid on August 7, 2024. Dividend yield was 8.59%, with an annualized 3-year dividend growth rate of 1.45%. The dividend payout ratio based on this year's estimates was 62.47%, while it was 58.60% based on next year's estimates and 15.43% based on cash flow. The company's debt to equity ratio was 0.74, and the debt to EBITDA ratio was 3.15. BTI's earnings and revenue are forecasted to grow by 3 to 5% and mid-single digits per annum, respectively, by 2026. The company maintained a full-year guidance with low single-digit organic constant currency growth on an unexpected 2% global decline in tobacco volume. BTI's gross margin was 69.1% well, 97%, and the expense ratio was not explicitly mentioned. The company's return on equity was minus 21.50%, while the return on assets was 5.16%. BTI's total liquidity was not specified, but the company reported a 5.7% rise in pre-tax profit to 5.60 billion euros for the first half of 2024. The company continued to invest in innovative, smoke-free products with revenue from new categories, including Voos vapes and Velo nicotine pouches, rising 7.4%. BTI's equity investments include stakes in various companies, but specific details were not provided. BTI's stock performance and financial metrics indicate a stable yet modest growth outlook. The company's focus on transitioning adult smokers to smoke-free products and strategic investments in innovative products position it well for future growth. However, the high dividend payout ratio and modest growth forecast suggest a cautious approach for potential investors. The company's financial health, with a manageable debt level and strong profitability, provides a solid foundation for continued operations and potential expansion. BTI's market capitalization was $78.5 billion as of July 2024. The company's operating margin was 39.5%, and the net profit margin was 25.6%. BTI's total debt was $52.3 billion, with a debt-to-capital ratio of 47.8%. The company's interest coverage ratio was 7.2 into it. BTI's cash flow from operations was $9.8 billion, and the free cash flow was $6.5 billion. The company's capital expenditures were $1.3 billion. BTI's strategic initiatives include expanding its portfolio of reduced-risk products and increasing its market share in the global nicotine market. The company's PRP portfolio includes Voos, Velo, and, well, Glow, which collectively generated 1.5 billion euros in revenue for the first half of 2024. BTI aims to achieve 5 billion euros in RRP revenue by 2025. The company's RRP market share in the US was 20.5%, while it was 18.7% in Euro and 15.3% in Asia Pacific. BTI's management team is focused on delivering sustainable growth and creating long-term value for shareholders. The company's strategic priorities include driving revenue growth, improving operational efficiency, and enhancing its product portfolio. BTI's commitment to innovation and sustainability is reflected in its investments in research and development, as well as its efforts to reduce its environmental impact. The company's sustainability goals include achieving carbon neutrality by 2030 and reducing water usage by 35% by 2025. Long-term growth projections. Growth projections for innovative industrial properties. If Harry invests $100,000 in innovative industrial properties, the long-term growth projections can be estimated based on historical and forecasted growth rates. Assuming an average annual growth rate of 7% and a dividend yield of 6.46%, the investment's value and dividend income over different periods are as follows. After 1 year, the investment would grow to $107,000 with a dividend income of $6,460. After 5 years, the investment would increase to $140,255, generating $8,680 in dividends and annually. Assuming a 5% annual growth rate in dividends, in 10 years, the investment would be worth $196,750 with $11,200 in annual dividends. After 20 years, the value would rise to $386,968 with $14,500 in dividends. Finally, after 30 years, the investment would reach $761,225, providing $18,800 in annual dividends. These projections assume reinvestment of dividends and a steady growth rate. Through actual returns may vary based on market conditions and company performance. Growth projections for Altria Group, MO. For a $100,000 investment in Altria Group with an average annual growth rate of 4% and dividend yield of 7.84%, the projections are as follows. After 1 year, the investment would grow to $104,000 with a dividend income of $7,840. After 5 years, the investment would increase to $121,665, generating $9,600 in dividends annually. Assuming a 3% annual growth rate in dividends, in 10 years, the investment would be worth $148,024 with $11,200 in annual dividends. After 20 years, the value would rise to $219,112 with $13,500 in dividends. Finally, after 30 years, the investment would reach $324,340, providing a $16,200 annual in dividends. These projections assume reinvestment of dividends and steady growth rate, though actual returns may vary based on market conditions and company performance. Growth projections for British American Tobacco, BTI. For a $100,000 investment in British American Tobacco BTI with an average annual growth rate of 3% and a dividend yield of 8.59%. The projections are as follows. After 1 year, the investment would grow to $103,000 with a dividend income of $8,590. Over 5 years, the investment would increase to $115,927, generating $10,200 in dividends annually, assuming a 2% annual growth rate in dividends. In 10 years, the investment would grow to worth $134,392 with $11,600 in annual dividends. After 20 years, the value would rise to $180,611 with $13,000 in dividends. Finally, after 30 years, the investment would reach $242,726, providing $14,500 in annual dividends. These projections assume reinvestment of dividends and a steady growth rate, though actual returns may vary based on market conditions and a company performance. In summary, each investment offers different growth and income potential. IIPR provides a higher growth rate, but with a lower dividend yield, while MO and BTI offer higher dividend yields, but with lower growth rates. Harry's choice will depend on his investment goals, whether he prioritizes growth or income. IIPR's roller coaster ride. Innovative Industrial Properties operates as a volatile and highly regulated cannabis industry, which has seen a fair share of its up and downs. The company's focus on cannabis-related properties induces a unique risk, particularly related to the uncertain regulatory environment. For instance, the ongoing federal prohibition of cannabis in the United States remains a looming risk that could significantly impact IIPR's business. Past events highlight the volatility, such as in 2019, when news of the potential progress of the SAFE Banking Act caused IIPR's stock to urge and then surge, only to plummet when the legislation stalled. Market conditions also added to this roller coaster ride. During economic downturns like the 2024 recession, consumer spending on cannabis could drop, potentially leading to tenant default and higher vacancy rates for IIPR. The company's reliance on long-term leases provides some stability, but tenant financial health remains a concern. While a beta of 1.5, IIPR stock is a 50% one more volatile than the broader market, reflecting its sensitivity to both industry-specific and macroeconomic factors. Altria Group's defensive play. Altria Group has been a defensive play for a long time for investors, but it's not without its own set of challenges. The tobacco giant faces significant regulatory risks that have historically driven volatility in its stock price. A prime example is the FDA's 2018 announcement to reduce nicotine levels in cigarettes, which led to a sharp 10% drop in Altria stock within a single day. Such events underscore the company's vulnerability to sudden regulatory changes, market conditions, particularly the evolving consumer preferences away from, let's say the traditional tobacco towards alternatives like vaping, have further tested Altria's resilience. The company's $12.8 billion investment in Juul, once seen as a strategic move to capture the growing vaping market, turned into a liability as regulatory scrutiny on Juul intensified, resulting in significant financial losses for Altria. Despite these challenges, Altria's stock remains less volatile than the broader market, with a beta of 0.6. However, the stock is still susceptible to sharp declines in response to navigate and then also for the negative regulatory news or shifts in public health policies. British American Tobacco's Geopolitical Balancing Act. British American Tobacco faces a complex web of risks that extend beyond the tobacco industry's usual regulatory challenges. Operating in multiple countries exposes BTI to significant currency risks and geopolitical issues. For example, in 2020, the company's earnings were heavily impacted by the weakening of currencies like the Brazilian real and Turkish lira. Despite steady operational performance, these currency headwinds underscore the volatility that BTI must navigate as a global player. Regulatory risks are equally prominent, particularly in emerging markets where sudden changes they can disrupt operations. A notable instance occurred in 2017 when India imposed stricter packaging laws and increased taxes on tobacco products, leading to a noticeable dip in the BTI stock price. Additionally, BTI's significant investments in reduced-risk products like vaping and heated tobacco introduce another level of risk. If these products fail to gain traction to key markets, BTI could face substantial financial setbacks. With a beta of 0.8, BTI stock is less volatile than the overall market, but its sensitivity to global market conditions and regulatory changes makes it a prone one to significant swings, particularly in response to macroeconomic shifts and geopolitical developments. Before you make your next move in this volatile market, ask yourself, are you prepared to not just survive, but thrive in this recession? The right investments can transform uncertainty into opportunity. By investing in resilient dividend stocks like IIPR, MO, and BTI, you're not just protecting your portfolio, you're setting the stage for long-term success. Don't let this chance slip by. Hit that subscribe button, share the video, and let's navigate these turbulent times together. Your financial future is in your hands. Make it count.